Hey, this is Tony Daly, and I'd like to go over an Iron Condor trade that I just put on. And I'm looking at the SPX, the S&P 500, and I have a linear regression channel here, and you can see how the S&P has been moving to new highs. We're at 1759.33, which is another all-time high, and my linear regression channel boundaries are up at 1791 and 1662, along with my two moving averages. So we could see that we are clearly overbought, and we've been overbought for a while, and the markets are just trending upward. Anyway, I wanted to put on an Iron Condor on the S&P. So what I did was I went over to November, and I was looking on the downside. I was looking to sell a 15 delta, which was basically down at 1690. So if we go back to the charts here, 1690 puts us somewhere around this area right here, right around the 50 period moving average. And on the upside, I was looking at the 21 delta, or the 1790, which puts the S&P basically in the stratosphere. And if we look at that on the charts, you can see that's running up against my upper range here. So in any event, I put them both together, and I looked at four contracts, and we're looking at a credit of 250. And with 10 wide strikes, it's basically a 25% 25% credit. Now, if you notice, if you want to get a good idea of what skew looks like, you can basically look at implied volatility. On the put side, I want you to notice how as we get further out of the money, the implied volatilities go up. And on the call side, you will notice that we're down in the 9% range, and the implied volatilities basically go down. So that's an example of what we call volatility skew. So what we're basically saying is there's more risk to the downside than there is to the upside, and the market is pricing in more risk to the downside. So I gave it a little bit more room on the downside because, let's face it, this market is just so extended. But in any event, we'll see. If we take a look at the risk profile here, we're basically looking at the red line is the expiration line, and the white line is our T line. And T means today, so it's T plus 0. So this is what we're looking at right now. Here's today's price, 1754. And we're sitting basically right here. So this trade will run through November. Now what I did was, if you notice, my deltas were minus 1350. What I like to do is I like to put on a call, and I want to cut these deltas in half. So what I did was, you can see here that I bought a November 1820 call. So if we go back to the tab and we look at the 1820 call, you're going to see that that has a delta of plus 8. So what I did was I really wanted to take my deltas down a little bit. So if you add this, I added this call, and now my deltas are minus 5. You don't want to get them necessarily to 0, but it's good if you could bring them down, and this call cost me $1.50. So now if we look at the risk profile, I want you to see how it has totally collapsed. And if you look at the T line, notice how this call protects me should the market go up. So here's my expiration graph, but if you could see, I totally have that call hedging an awful lot of the upside risk. So basically, this is how I like to work the trade. You do give up a little bit of profit on it, but I have one side hedged right now. So now the basic thing is to manage your trade, and I'm going to keep an eye on it, and I'm looking at the deltas, and my plan is if the deltas move more than 10 points on either side, I will look to do another adjustment. And the adjustment is going to depend on where we are in the cycle, what my P&L is at that point, and we'll just go from there. I plan to take this trade off when I have 10 to 15% of profit, and that would be based on the margin. So if you want to calculate what the margin is, we basically have $1,000 per strike times 4 is $4,000. We've collected $1,000, so we have $3,000 in margin. So 10% of $3,000 is $300. So basically, I would be comfortable taking this trade off when I hit plus $300 in profit. And that is the trading plan. And what we will do is we will keep this trade on, and we will track it as we go so you could see the entire cycle. Hope this helped. And if you have any questions, let us know. And I'll talk to you soon. Bye-bye.